Welcome to our Economic Data Analysis YouTube channel, where we dive deep into regional economies and property markets. Today, we present a comprehensive overview of the property market in Cairns, a vibrant urban centre nestled amidst the pristine landscapes of far north Queensland, Australia. Let's delve into the economic dynamics shaping Cairns and the opportunities and challenges it presents. Hello everyone, welcome to our March 2024 Economic and Property Market Review. It's a monthly report, and today we're diving into the dynamic property market in tropical far north Queensland, specifically focusing on the Cairns region. And we have offices in Edge Hill in Cairns and also in the Sunshine Coast in southeast Queensland. So grab your notepads because we have a lot of stimulating information, and it's geared for especially domestic and foreign property investors, as well as developers, builders and lenders. So let's get started. Firstly, let's set the stage with an overview of Cairns. The Cairns Regional Council has established a city in a rainforest master plan, implementing a tropical urbanism ethos into the planning scheme. With a population of 172,000, and a land area of 1,689 square kilometres, Cairns is framed by the World Heritage listed wet tropics rainforest, the Coral Sea, and the Great Barrier Reef Marine Park. By comparison, Cairns is more than twice the size in land area of New York, USA, at 790 square kilometres. Cairns is a world-renowned and increasingly popular tourist destination and serves as the gateway to the nearby Atherton Tablelands, Daintree and outback savanna region beyond the Great Dividing Range. It is the principal centre of the region of good quality agricultural land and areas of high ecological significance. Cairns sits on the Bruce Highway and is an important freight and transport link to Brisbane and southern centres. Cairns is also the northern rail terminus for Queensland's Eastern Seaboard Railway line from Brisbane. Cairns Airport is the 7th largest airport in Australia, with direct flights to most major Australian capital cities and into Asia and New Zealand. Looking at the economic profile for Cairns over the period of the financial year ending 2022 to the current date of March 2024, the gross regional product was $10.2 billion. That was 3.4% up from 2021. The total household disposable income sat at $131,900. Now, key industries based on the data from the 2022 financial year showed that tourism sales were at $1.68 billion plus $862 million in value add. So the tourism industry is significant and does have a flow-on effect to other service-based industries in Cairns. Now, tourism's current annual value, including value add, is estimated to be around $2.5 billion and recovering to the pre-COVID pandemic value of $6.6 billion per annum. Construction had the largest single direct output, generating $2.41 billion. Agriculture sat at $161 million, with 50% of that in other fruits. Healthcare and social assistance was the largest employer, with 15,973 local jobs. The household services sector accounted for 44.5% of total employment. In the financial year 2023, the unemployment rate was 2.9% and remains at that level, which is the lowest in over a decade. As far as exports go, transport, postal and warehousing had the largest total exports by industry, generating $677 million. Turning to building and construction, the construction industry had the largest number of registered businesses in Cairns at 18.3% of the total in the 2022 financial year. Now, the value of building approvals in Cairns in December 2023 was at $333 million of that past 12-month period. A significant contributor to the economy of Cairns is the Port of Cairns, operated by Ports North. It is a vital hub from which the network of 9 ports in far north Queensland operates, having significant berth capacity and laydown facilities for major cargo. It has recently undergone a $127 million upgrade with the widening and deepening of the channels and swing bay for the turning of larger vessels inside the port. Above and beyond the substantial naval, defence, bulk freight shipping and fuel tanker sectors, there were 280 passenger vessel movements in the Port of Cairns in the last 12 months to January, including reef tours and overseas cruise ships. 83 of those were arrivals of cruise ships over 100 metres in length, and most of those were over 250 metres. The largest passenger vessel was the Ovation of the Seas at 348 metres long, with a capacity for 4,905 passengers. Now that we have covered the general underlying economy at a high level, let's transition to the property market and have a closer look at units in particular. Cairns is experiencing a shortage of residential units, with sales data indicating high demand. The unit market is undersupplied, attracting interest from southern buyers looking for quality stock. There is an overall shortage of dwellings in Cairns from January 2020 to January 2024. The number of dwellings on the market dropped from 6,100 to just over 2,000. Limited supply and competing factors are challenging the short-term goal of increased residential properties. Taking a look at the recent residential unit supply data, the downward trend in unit supply shows a 38.5% decrease over 2 years and a 52% decrease over 4 years, indicating a challenging environment for property developers. Examining projects that have been approved, we see commitments to several multi-unit developments set to commence in 2024. Notable projects in the Cairns City area include a $550 million investment by CIU1 Proprietary Limited and Gasparin Group, a $30 million 65-unit hotel and apartment complex by Billion Century Group, and a $17 million 55-unit apartment tower by Bryant Developments, all in the city. That's along with an $18 million commitment to Ramsay Health's expansion at the Cairns Private Hospital. It is widely publicised that Cairns has critically low levels of housing stock. Anecdotal real estate industry evidence indicates residential stock is at its lowest levels in decades. Since February 2023, leading local agents have seen the return of investors who view our rental market as a good long-term option. In the past 12 months, rents have continued to increase and vacancy rates are constantly below 1%. Now we'll look at some actual supply data for different types of units in different price ranges that have both sold over the last 12 months from January 2023 to 2024, and those that are currently for sale on realestate.com. 4-bedroom units of $650,000 to $1.2 million. 4 sold over the last 12 months, 0 sold in January, and there are none currently for sale. 3-bedroom units at $450,000 to $950,000. 110 sold over the past 12 months, 6 sold in January, and 21 are currently for sale. 2-bedroom units of a price of $400,000 to $800,000. 155 were sold over the past 12 months. 6 sold in January and 29 are currently for sale. And 1-bedroom units of a price range of $375,000 to $425,000, which is probably the higher level of finishes for a 1-bedroom unit in Cairns. 9 sold over the last 12 months, 0 sold in January this year, and there are 3 currently for sale. And in other price ranges, current stock levels of units on the market over a certain price are listed as follows. There are 2 4-bedroom units over $650,000, 31 3-bedroom units over $450,000, 30 2-bedroom units over $425,000, and 6 1-bedroom units over $375,000. To us, this data indicates that the unit market is undersupplied and there is continued interest from southern buyers looking to purchase that quality stock. Another piece of important information about the Cairns property market relates to the gross unit rental yields. SQM Property Research Company said Cairns had the country's highest unit gross rental yields. Citing Domain's rent report, several suburbs had yields of 8%, which it said was basically cash flow positive. The comparable yield in Brisbane was 5.73% and in Sydney 4.52%. Domain's Chief of Research and Economics, Dr. Nicola Powell, said, "When you have a yield of over 7 or 8%, that is a very strong yield. It's cash flow positive." The suburb of Bungalow is just 2.8 kilometres from the Cairns CBD and currently has Australia's highest median gross rental yield at 8.93%. However, the hotspot title is hindered by the fact that unit development had all but dried up in Cairns by October 2023, when there were about 700 units on the market compared with 2,000 pre-COVID. Speaking to the shortage of dwellings overall, the number of dwellings on the market in January 2020 in the Cairns region was approximately 6,100. Now compare that to just over 2,000 in January 2024. Locally, the growing demand for increased supply of residential properties in Cairns in the short term is likely to be moderated by limited supply of available trades and materials due to competing factors, including the federal government's planned delivery of mining and roads infrastructure, affordable housing, health, maritime and education projects, and private investment from speculative developers in the health and aged care spaces. The state government has announced it will construct 490 social and affordable homes in Cairns South, catering to older Queenslanders, and also includes specialist disability homes. Competing future residential income generating sources have also seen a lull in development approvals and delay in shovel-ready residential multi-unit project commencements, largely driven by developers' unwillingness to commit to off-the-plan projects in times of high inflation, rising interest rates and construction costs. If maintained, this uncertainty should see retail residential unit supply decrease below even current levels as builders commit to relatively lower risk industrial unit and government contracts to mitigate the risk of non-completion due to unforeseen cost blowouts. As of June 2022, Queensland has experienced an extraordinary influx of individuals from other states with a weekly migration rate exceeding 1,000. This surge marks Queensland as the leading destination for interstate migrants in Australia, positioning it as the fastest growing state in terms of population. Looking ahead, Queensland's upward population trajectory is expected to continue, bolstered by a gradual resurgence of international migration post-pandemic. By 2032-33, Queensland's population should reach approximately 6.2 million, growing from the current 5.4 million to between 6.4 and 8.27 million by 2046. So Queensland's northern regions stand to benefit, offering relief from urban congestion and fostering regional development opportunity to decentralise government administrative activities, potentially shifting to regional centres like Cairns. Addressing the housing shortage will require a significant increase in dwelling construction, presenting opportunities for real estate developers and investors. Additionally, initiatives aimed at improving housing affordability and accessibility will be crucial in sustaining Queensland's growth momentum while ensuring inclusive development. Looking ahead, the 2032 Olympic Games are expected to contribute significantly to Queensland's gross state product, with an estimated uplift of $4.6 billion. This anticipated economic boost aligns with the region's growth trajectory. As developing economies in Asia witness an expansion of their consumer classes, Queensland stands poised to capitalise on the expanding tourism market. The post-COVID recovery in China, coupled with rapid population growth in India and Southeast Asian markets, augments opportunities for Queensland's tourism industry. Diversification beyond traditional markets, while China remains a cornerstone of Queensland's export market, diversifying into emerging consumer-driven economies like India and Southeast Asia holds immense potential. The shift towards consumerism in these markets aligns with Queensland's strengths in resources, education, tourism and high-value agricultural exports. Ramsay Health's expansion into Cairns Private Hospital includes 2 new theatres and a new sterilising department. It is under construction and $18 million has been committed so far. The $250 million Cairns Hospital expansion is one step closer with the tender to have been awarded this year. The expansion will deliver an additional 96 beds across 2 sites and is in addition to the $26.5 million emergency department expansion currently underway. The state government is investing around $346 million in hospital expansions and upgrades across Cairns. Cairns Hospital expansion project is expected to be completed in the first half of 2026. Looking at marine infrastructure, overseas cruise ships and defence now. As regards the Navy, HMAS Cairns Naval Base has responsibility for the region between Rockhampton and Thursday Island. It employs 900 Navy and civilian personnel and is the home port for 7 naval vessels, as well as patrol boat and hydrography services. HMAS Cairns provides refit and training services support for neighbouring Pacific nations. In 2024, a local marine services business secured a $70 million contract from the Navy to establish the Cairns Regional Maintenance Centre to support the Navy's Cape-class patrol boats. Looking at defence and border security, a $30 million state government Unite and Recover Economic Recovery Plan investment funded new infrastructure, including 2 wharves and connection of services costs, including power and water. The construction of these wharves will expand Cairns' capacity to carry out in-water maintenance on Australian Defence Force and Australia Border Force vessels. Looking at other infrastructure towards more shipbuilding facilities, recent state and federal budgets committed an additional $300 million to deliver the Cairns Marine Precinct, or CMP, to capitalise on emerging defence and marine industry opportunities and investigate shipbuilding in Cairns. In 2023, the state government committed a further $39 million for projects in the CMP in the current context of an increasing focus on the geopolitical environment in the Indo-Pacific region. Funding also supported construction of a common user facility to be used by all local marine maintenance, repair and overhaul service providers. The state and federal government each contributed $180 million towards this project, totalling $360 million. Now looking at overseas cruise ships. The Port of Cairns is one of Australia's busiest cruise destinations, with major international cruise ships scheduled annually and an array of domestic reef vessels operating on a daily basis. The award-winning Cairns Cruise Liner Terminal is located near the city centre, an easy walk to downtown shopping. Ports North, the operating authority for the Port of Cairns, says the recent $127 million Cairns Shipping Development Project has improved the existing Trinity Inlet shipping channel, including increased resilience for the Port of Cairns against an extreme weather event. This project facilitates cruise ship growth for vessels up to 300 metres, with forecast demand of up to 150 cruise ships by 2031. It is expected to generate more than $849 million to the region and the potential for 800 new direct and indirect jobs during construction and more than 2,700 ongoing jobs by 2031. In 2020, the first Vista-class cruise ship, the Queen Elizabeth, entered the harbour as the largest cruise ship ever to arrive in Cairns, marking a new era in regional cruise ship visitation. the first of an additional 40 Vista and Grand class cruise ships to visit Cairns in 2020 as a result of the project. Tourism and Transport Forum Australia said North Queensland topped the list of the most popular Australian cruise destinations for 2024. Annual arrivals of passenger cruise ships over 100 metres in financial year 2023 was 68. However, arrivals have increased since then, with 81 arrivals in the 12 months from February 2023. Another pivotal objective, which may come as a surprise to some of our viewers, is the Queensland Superyacht Strategy, Cairns. The CMP and CUF objectives that we spoke about earlier also advanced the Queensland Superyacht Strategy 2018 to 2028. Most of the maintenance expenditure on superyachts in Australia occurs in Queensland, with about $264 million spent in Cairns and $775 million in southeast Queensland. Cairns is one of the busiest ports of entry for visiting superyachts, particularly those visiting Australia from elsewhere in the South Pacific. The city is home to some of the most experienced and quality-assured luxury refit and repair facilities in the Southern Hemisphere. Facilities include Austell Cairns Slipway, North Ship Marine and Tropical Reef Shipyard. Facilities such as the Crystal Brook Superyacht Marina in Port Douglas and Cairns Marlin Marina give easy access to the Great Barrier Reef. These locations also provide access to World Heritage Rainforest, Outback Queensland experiences and the Cairns International Airport. The Superyacht Group Great Barrier Reef provides premium service and support vessels to visiting far north Queensland. There is an expected steady 5% increase in chartering activity across Australia between 2021 and 2025, except for Queensland, which will increase on average by 7.5% because of Queensland's breadth of investment in maritime infrastructure. Over the 10 years to 2025, the private sector is estimated to have invested nearly $800 million in maritime infrastructure that also supports refits and maintenance of superyachts. Another project to have arrived in Cairns recently is Screen Queensland Studios Cairns. Renowned for its stunning on-screen locations, Far North Queensland is soon to boast a state-of-the-art film and TV studio complex open for business in the Cairns suburb of Portsmouth in early 2024. Screen Queensland Studios Cairns will complement the Brisbane studio and other facilities on the Gold Coast. Motivated by high demand from both Australian and international productions to film in this unique and spectacular part of the world, the new studio complex will house a soundstage and support facilities. The 1.5 hectare site is ideally located 5 minutes from the Cairns CBD and 13 minutes from the airport, with excellent access to major highways. Along with Brisbane and the Gold Coast, Cairns operates an international airport all year round. Located just 7 kilometres from Cairns CBD, the airport is one of Australia's leading regional airports, the gateway to the Great Barrier Reef and tropical rainforests of North Queensland. It is Australia's 7th busiest for international passengers, with direct flights from Tokyo, Osaka, Singapore, Bali, Auckland and Port Moresby. Post-COVID and pandemic, tourist numbers are recovering well, as the passenger figures show a 52% increase over the past 12 months. The airport carries 4.8 million passengers over 46,000 flights each year, and by 2040, expected passenger numbers will increase to 10 million as Cairns' population reaches 375,000. In 2024, a $9 million complete resurface and enhancement of key aircraft taxiways was completed. An extra 280 car parking spaces to total 1,165 non-covered, with a further 126 undercover have been built. The international terminal is undergoing its first major upgrade. By mid-2025, the completed $55 million upgraded terminal will be transformed into a contemporary world-class visitor experience showcasing local attributes. Singapore Airlines Airbus A350-900 wide-body aircraft will be deployed between Cairns and Singapore 4 times per week from March 2024 for the first time, and inject thousands of additional seats annually, more than 50% extra available seats per flight compared to current smaller Boeing services. Chief Executive Officer Richard Baker said September 2023 saw domestic passenger figures in excess of pre-COVID 2019 and international performance at 93%, the highest since the pandemic. He also said the larger aircraft boasts 40 business class seats and 263 in economy, meaning we have a great opportunity to attract high-spending visitors to our region, either travelling for leisure or for business events, such as those hosted by the Cairns Convention Centre. Larger wide-body 303-seat aircraft also has significant capacity to uplift freight, meaning local seafood and fresh produce exports will be able to fly direct from Cairns to Southeast Asia and beyond. Cairns Airport is currently to secure a relationship with Qatar Airways, noting Australia's bilateral agreement with Qatar does not restrict it from servicing Cairns. International traffic is still lower than mid-2019 levels, partly due to discontinued direct arrivals from Hong Kong or mainland China. Cathay Pacific stopped its direct flights in late 2019 before the pandemic for commercial reasons. But business and tourism leaders who have recently travelled to Hong Kong in the hope of attracting the airline back to the far north say Cathay Pacific should decide on restarting the route in coming months. So in conclusion, all current local evidence points to a sustainable need for residential units in Cairns and the far north super region. Economic and population growth indicators bolster this view. The growth is expected to create thousands of new highly skilled jobs across the state and contribute hundreds of millions of dollars to our state's economy. Cairns has a unique competitive advantage to attract and retain migrants, including an existing diverse and multicultural community and population, strong connectivity and accessibility by virtue of the city's well-established international airport, low unemployment, and a strong private and public investment pipeline, as well as a superior quality of life and livability to other capital cities and regional areas. Linked to the CNP and CUF, the Queensland Superyacht Strategy envisions that by 2028, Queensland's share of the Australian superyacht sector will grow to 90%, with Queensland recognised worldwide as a major superyacht hub in the Asia-Pacific region and a global superyacht destination, promoting superyacht visits for the Brisbane 2032 Olympic and Paralympic Games. The property market in Cairns continues to exhibit remarkable resilience despite facing formidable challenges in supply and construction costs. Market experts attribute this resilience to the intricate dynamics of supply and demand, which have led to intriguing shifts in homeowner behaviour and buyer preferences. The market's ability to weather changes stems from the tight building industry and soaring construction costs. These factors have significantly reduced property transactions as homeowners opt to hold on to their properties rather than engage in the market. As a result, the available inventory has tightened, creating a scenario where upgrading homeowners are more inclined to stay put. However, amidst these constraints, there remains a robust demand from buyers, including individuals relocating to the area. The influx of newcomers has injected fresh interest into the local property scene, sustaining market activity despite the challenges. David Forrest, the Managing Director of First National Real Estate Cairns Central, observes a heightened buoyancy in the unit market, particularly in the segment of two-bedroom units. This uptick in interest signals a shifting preference amongst buyers, potentially driven by factors such as affordability, convenience, or lifestyle choices. Forrest also points out a particular sweet spot for house investments in the range of $450,000 to $550,000. Within this price range, buyers seem to find a balance between affordability and value, making it an attractive segment for both investors and homeowners looking to make a purchase. The observation underscores the nuanced dynamics within the Cairns property market. While certain segments experience buoyancy and demand, others face challenges due to supply constraints and rising costs. Yet, amidst these fluctuations, the market remains resilient, adapting to changing conditions and presenting opportunities for both buyers and sellers. As Cairns continues to evolve and attract new residents, its property market is likely to witness further shifts and adaptations. Keeping a pulse on these changes and understanding the underlying factors driving them will be essential for investors, homeowners, and industry professionals navigating the Cairns real estate landscape. In summary, Cairns stands at the cusp of transformative growth, characterised by population expansion, infrastructure development, and economic diversification. As the region navigates through challenges, strategic investments and proactive policies will be essential to harnessing its full potential and fostering sustainable prosperity for residents and communities. Thank you for joining us today on this economic data-driven property market journey. If you found this information valuable, don't forget to like and subscribe for more insightful analysis and reports. See you next time.